Hey guys, welcome back. Hope you had a good week in the stock market. It's May 20th. SPY selling off, GME following suit. Sub up, like up, comment down. Happy Money sticks around. We have a Twitter you can follow us on at Happy Money YT, as well as a Discord server. Link for that is in the description. I retweeted this. This was GameStop NFT's second tweet. Meet the new kid on the blockchain. GameStop NFT. What the internet did for communication, blockchains do for value. Now global communities can connect, coordinate, and transact like never before. Public permissionless, credibility, neutral value layers, power to players. This is a huge, of course, very generic and broad, but this is actually what's been kind of speculated that they're going to do. So if they're anything close to basically blockchains for value, that's huge, because that opens up so much more than just trading video games or buying and selling them digitally. Seeing houses, transacting using NFTs, which we saw. There was one in Florida that's happened already like that. It's kind of limitless, like it has in that tweet. Value, blockchains being used for value, crazy. SPY kind of tanked today on our options expiration. In the last video, what I talk about market crashing. This isn't the market crash I'm talking about, but this could be the beginning of it. Next week might be bad. We've got Fed minutes and some data coming out, and we haven't seen a big proper crash yet. We're in a bear market and a recession, more or less, I'd say, but we haven't had this was the worst we've seen so far right here this week, and next week maybe it'll be like this, maybe worse. SPY's now broken that low, kind of confirmed the trend. I mean, this has just been a consistent down, consolidate, down, consolidate, down, and then this consolidation's weird, but more or less this is consolidating, and now we broke that low. So next week, yeah, we'll see. We will see, but I'm thinking it's probably could be a big one. If you look at, COVID, but that was an external event. I mean, so they say. But if you look at other crashes, 2019, that was much more significant. Right now, we've just been in a slow kind of bear market. We've had big days, but nothing like this really yet. 2019, 2018, I think too. Yeah, right here. Right here. So I'm on daily candles. Another one in 2018. Those were short term. I mean, the big ones, 2008, 2001. But those were in bear markets. So here's one in 2015, 2016. That was actually the new year. Look at that, January. Just huge gaps. Crazy. I don't know if that's reading. I don't know if that chart's reading right, but here's 2015. That's pretty severe. So we haven't really had that. Those are all just kind of flash crashes, more or less, where it's not necessarily in a bear market and then a crash in it. This one was kind of a longer term, I guess, but not even that long. I think we're more close to kind of a bear market and then a crash, more like here. This is 2008. So kind of the bear market thing consolidated for a while, a whole month. But then something like this, I think this was so this was I think the worst part of the crash right here, which is actually crazy because it's not as bad as maybe 2018, 2015, 2019. Those, this just happened after so much selling off. You could say it was here. I don't know, I'd have to look at percentages, but the Volkswagen squeeze happened right here from this, it crashed here, and then on this bear market rally, epic rally, it squeezed off of that. So I'm thinking it's something like this, probably coming soon, maybe next week. So yeah, we'll see with GME what it does. What is kind of interesting is how well it's held up. So if you look on these daily candles, I'll pull GME to the daily. Look at the last, since the 13th. GME has been just solid. Look, 13. This has just been consolidating. The ranges are pretty big. Yesterday we had up 10%. Today we're almost down 10%. But they're just basically barcoding more or less. Just very, very tight, or consolidation, not tight, but wide consolidation, but stable nonetheless compared to the overall market. If you look at this, so look at, I mean, just look at the gaps, and then the inconsistent candles and the ranges, and now SPY even breaking down the low, and GME, it's just basically been more or less flat through that. So yeah, it's showing its stability even in a bear market so far. I mean, given it's definitely come down, but yeah, curious to see if SPY does crash next week, what happens. Tuesday, Wednesday, Thursday, maybe we'll see GME with some upside move just from the SLD. But before then, on Monday, maybe a retest of that 77, maybe even a new low, I'm not sure. But we did flip bearish on the hourly, got red under the 9 moving average, got bearish MACD. But the same thing happened yesterday, we flipped bullish, so really just consolidating nicely. Volume today, I'm doing the video a little earlier, it's only 2:30. Got somewhere I gotta go to. We'll see what the volume ends up being. Looks like about like yesterday, volume wise. But the market, I mean, it wasn't a huge move on the market. It's almost 2%. It's just that it broke those supports that was the biggest thing. So SPY hit a new yearly low, 380.54. I mean, you look at where that is. Back in February 2021, it's given back all its gains since February 2021. So crazy stuff happening. Tesla was kind of leading the way down for a while. Yeah, it's down almost 10%. I don't know if this is Elon Musk making this kind of lead the pack on the downside, but it's good for my play. I've got to put debit spread where I want it, about down here at this support, and I think it's probably coming. If we get a crash next week, I could see Tesla in that 550 range. I'm a little biased though. I want it to come down, even though I have it long in my long term. Oh, Beachbody's rallying. Don't know what's going on with that. So we have short puts on GME, as well as covered calls, as well as shares. I'm trying to think about what I opened up today. Basically, it bounced nicely off that 90, but it's more or less just following the SPY pretty much exactly. So next week, SLD, we'll see. Probably sell off a little bit before then. On this brokerage, though, Webull, I've got a short put for 89. Should expire worthless. I have an order out for it to close at, I think, 1 penny. So that will be neat. Maybe even getting some call credit spreads for next week. This is kind of a bear flag too. Or just shorting some calls at market open. Can be scary though. Can be very scary doing that on here on GME. There it is. That's all I did today, which is good. That's a good day. 103 short calls in GME. I opened them up. I wasn't at the market ready to open. So, but I was here about here, and I had my indicators, bearish MACD. I tried to open up right about here, and I did, and then it basically stayed pretty even through this. Went up a little bit, but it wasn't too hard to hold. Stayed below VWAP today. Being an SLD, thought maybe this might be sketchy, so I watched it and then just kind of chilled out. The ones I closed yesterday, because I did take a loss on some yesterday, I closed them here. Of course, in hindsight, now I could have left them, but I didn't. So basically just made it back today on those. And then my SPY play opened 2 days ago, bearish. Was a little sketchy yesterday because we had that rally, but I figured today would probably sell off. The market's so scared, money's not flowing, people are scared with it, so they really don't want to hold it over the weekend, hold positions. So it seems like it's been pretty consistent with market sell-off into Friday. Had to turn the Yaz up a little bit. And so that's all I did on there. Here's my call credit spread on SPY, 389, 390. That'll be nice. I was definitely willing to roll it over, so that'll be a 528 max gain on basically a 1 day to expiration call credit spread. short put on birds. So this is giving me these shares, these 500 shares of birds at less than the price that it was when I opened it. So I'm not sure if you guys follow that, but even though I opened up a short put at $2.50, if it expires in the money and I take the shares, I'll still get the shares for cheaper. I won't get them for, I mean, I'll get them for 2.5, but if you subtract the credit I received to open it, I will have gotten them for less than where it was. Basically the price it was at, I'll have gotten them for less than 80 cents. So that's why it's fine to open them in the money. I don't have a problem with that. Tesla play, here it is. So this is a pretty big one. It seems kind of not much reward for the risk, but it costs $9.46. It's a put debit spread. This is one I opened up, I don't know, a few days ago. 4 grand max gain. I need 548 by expiration for that to happen. It is up 64%, which is pretty nice. We're at 600 bucks on it, but I've got, let's see, 28 days still, so I'm gonna let it ride out for a bit. If I start to see a bear market rally, I'll close it, and this is what we did last time with Tesla. Similar gains actually on it, where I get about a month of time, and then just following TA, and then we started to rally, and then I closed it. Where was that actually? It wasn't even that big. I maybe could have kept it open. I closed it here on this day, so had a little rally, and then this one I opened up yesterday, I think, on this day. It just looked like it was consolidating before it was going to come down more, and sure enough, today that's what we're getting. Just these stair steps, consolidation, and then gap, consolidation, gap, down, consolidation, gap, down. So hopefully that one I get max gain on. Might even open up a call credit spread on SPY before close for Monday even, if we do get a gap down. Cover calls, here they are on GME. Have a position or order to close these at minimum. Here's my put credit spread. Oh shoot, I have to actually roll this, I forgot. So I will roll this, see if I can do it quickly while recording so you guys see kind of what I do. I'm bullish on by the end of June, very bullish. So basically July 1, that's where I'm going to be putting my target for call debit spreads and price target of 200 plus. So if I move this thing around a little bit, I could widen the spread. I just want more exposure on it. So I might even widen it to like a 120. I don't know if I have enough margin for that. But now it's a 110, 120 put credit spread. Oh, I do. So I'm gonna do something like that. Bump it up a little bit. I like that. Gives me a ton of time. I maybe don't even need that much time. The only thing is we might sell off the next week. So I don't necessarily want to get a weekly. Then I'll have to roll it again. If I have to roll it again, I have to widen the spread again. Then I'm running out of margin. So maybe I'll just do it like that. Yeah. All right. That's what I got for you guys. Been fun. See you on Discord. Peace out.